Here we go.
Hello, everyone. I am Marcia, and welcome to the Wealth Project. Today, we're going to be talking about planning and preparing for home ownership. And I have a special guest with me today, Dana, and he's going to introduce himself shortly. But I hope that you can spend some time with us this morning. We'll be quick, we won't hold you long, but this is a really important topic, planning and preparation for home ownership. So, you know me, I'm Marcia Duke, licensed real estate agent serving Queens and Nassau County and Suffolk County, New York. And I'm going to introduce my co-host today, Dana.
Great morning, everyone. Thank you, Marcia, for your time. My name is Dana George. I'm a mortgage loan originator with Hartford Funding. We're out in Jericho, New York, which is about the center. It's between Nassau County and Suffolk County. I am a father of three, 7-year-old, 2-year-old, and 6 months. And I happily married man as well. And I'm really excited to be on this show because planning and preparation is really huge when it comes to the homes, especially what's going on in the environment right now. You could be excited seeing a house and all of a sudden it's gone that same day because you didn't have all your ducks in a row. So I think this is going to be a really great topic that Marcia and I, we've been planning for a little bit now and decided let's go live and go over it with with all our fans.
Definitely, definitely. As we also plan the things that we do. So Dana, this is really important, as you said, because a lot of the times what we do in life is we plan for a lot of different events, right, in our life. And I find that like the top three things that I could think about that what we plan for, which is one of my favorites, is vacation. I love vacation. So for the year, I probably take 2 vacations. So I always plan it out where I'm going to go, my friends I'm going to go with, outfits, bathing suits. So I take a lot of time to prepare for my vacations. And I think a lot of people do that as well, right? What are something else that we plan for, Dana, you can think about?
Weddings. That's like
Yeah.
another huge thing that people plan for. And going back to the vacation, who doesn't like a vacation? I've been on several Disney cruises. I would love to take my middle son and my youngest daughter, but we know that they're a little too young. So we're actually planning like 2 years ahead of where we're going to go and where we're going to
Wow.
go. And that's just a vacation. And in weddings, I've spoken to people who plan 1, 2, 3 years in advance because of how much money it's going to cost. So they
Yeah.
know it's like, okay, we're going to eat ramen noodles on Thursdays, bologna sandwiches on Fridays. And like I've met people who've spent money recklessly, but when it came to those certain things, they put the money aside. And some other things like vehicles, cars, the newest car comes up. People know that how much I have to put down. This is
Right.
what I got to do. And that's a lot of planning that people do. But just
You're
being
right.
in the industry, I've noticed when it comes to housing, that's not so much.
Not so much, not so much. So the top things that we mentioned was, vacation, occasions, and shopping. If you're going to go shopping for expensive items like a car, people put a lot of time and effort into that. And what I've noticed is that when it comes to home ownership, I know that it's a bigger expense. And I think because it's such a big expense and probably one of the most expensive things people purchase in their life, that apprehension and that fear comes in for people automatically count themselves out. And they're saying, you know what? I can't afford to buy a home. I can't afford the prices in New York are crazy. I can't afford that. You may not be able to afford it in New York, let's say, in the central part of New York or different parts of New York, you could. But here's the key. Here's the most important part to this process is planning, right?
Agreed.
Weddings. You said people put 2, 3 years into planning a wedding. You're planning vacation. You're planning a year or two ahead for that particular vacation. So
Agreed.
when it comes to planning for home ownership, I feel like the emphasis and the planning and mapping it out is not there because to buy a home is not something you're going to wake up tomorrow and be like, okay, I'm going to go and buy a house. It takes time, right?
Especially now. I know you've shown houses to people where you probably walked in at 1 o'clock, walked back out by 1:30, call the person up at 1:45, and the house is already sold. So
Mm-hmm.
right now in this environment, you really, really, really do have to plan ahead of time because on Long Island, upstate New York, Westchester, Orange County, all those counties, the houses are they're going like crazy. It's like hotcakes.
It is definitely. And I've had that happen where, I go in to submit my offer and they already have like 5, 6 offers now, especially with tons of backup offers, right? Because they
Yeah.
have people who came ready with the approval with their proof of funds. They know what they want and they're moving full steam ahead, because in this
Yep.
market, window shopping is fine if you're not ready to purchase a home. But if you're planned out and you're ready to go, then you definitely have to be ready to go, right?
Hmm.
So,
And even in, like you said, window shopping is something that people have to think about as well, is because when my wife and I were looking for our home, we did a little bit of window shopping. Well, window shopping is a little bit different now as well.
right. Right, definitely. That idea. And when we say window shopping, as we're talking about, you go on Zillow, go to open houses and just go, because you want to get a feel of home shopping. You want to get a feel of the process. You probably want to get a feel of a home, the neighborhood, and that's all good and well to do. But if you're intentionally looking to purchase a house, the first step is not to go to Zillow. to window shop. It's not to go to open houses, because you could be going to an open house for a house that's with that's not within your budget, right?
Mhm.
You can be looking at things that you wouldn't be able to approve based on your financial standing. So instead of doing that, which is fine, you could do along the way, but the first step is to look at your finances. What can I afford, right? How much
Mhm.
money do I have saved? And how important is that in the process of the pre-approval for you, Dana?
That is really huge. I don't think people, realize that what it takes to get a home. Like I'll see a lot of memes on Facebook. It's like, oh, I rent for $1,500 a month, but for an extra $500 a month, you could own a home. Technically, yes, but there's a lot
Right.
more to it on the back end. And I mean, there's a lot between your assets, what you have saved up, your income. Income's like
Mhm,
a real big thing due to COVID.
mhm,
A lot of rules has changed. So if you were someone who was salary and making a lot of overtime, a lot
mhm.
of people lost those hours. Lost
Right.
those hours. And when the bank sees that you had a big dip in your income, they're gonna be a little worried about that. And it doesn't look like right now that unemployment's picking up
Right.
drastically enough to where a lot of people can work a lot of overtime. So there's a lot of changes when it comes to that. And then another big thing is I know I'm pretty sure when you're working with people, you want to look at assets as well as, like, do they have the down payment
Mhm.
and the closing costs.
Right. So let's look at the pre-approval process for a little bit. Right now, how COVID has changed the pre-approval process when it comes to home shopping is, from my side, is some sellers have started to say, before we even confirm or let you come into our house,
Yep.
we want to see your pre-approval. So they're asking for it ahead of you even coming to the house. Prior
Yes.
to COVID, we can make an appointment and you go in. But a lot of sellers are now, if I'm going to take the risk with my life, possibly, bringing someone in that may be affected with COVID, I want to
Yes.
make sure that this person is actually serious and they do have a pre-approval. I've even came across some sellers asking for proof of funds as well. They want to make
Mhm.
sure you have your closing costs together. So COVID has affected the pre-approval process quite
Yeah.
dramatically in that way.
Yeah, yeah, and that's what I was like kind of referring to about the window shopping.
Mhm.
Before you possibly could just go into a home, shop around, see what it looks like, get a feel for it. But now you have to get pre-approved before you get in there. And then, like you said, some of the sellers want to make sure that those funds are there, that you're ready to go. Because there's so many offers that are happening.
Yeah.
Nobody wants to wait another 2 to 3, 4 months for you to get those down payments. Like, there are people that has that money that day and they're
Right,
ready
right,
to go. And
right.
like that's the biggest thing. Like when I speak to people is like, the assets. Like it's you gotta have the money, you gotta have the money there, whether it be in your bank account, in some retirement plans, which I don't
Right.
really suggest you take it out of your retirement account, because retirement is another issue that you don't
Mhm.
want to worry about, but that's a whole different story. But
Right.
you want to start putting the money away for that reason.
Yeah, and that's part of the planning process, right? Planning and
Yeah.
preparing. 'Cause listen, you can't buy a house 3 months from now, 9 months from now, 12 months from now, right? But you can work towards a time frame, a 12 months, a 24-month time frame. And that's what we're trying to get people to understand, is that it may not be possible now, you may not be ready now. And it's the same thing with your credit, right? Give yourself a plan. Put out a plan. Over time, I'm going to save this amount of money. I'm going to fix my credit. whatever it is, that process is so important for you to accomplish that goal of becoming a homeowner. So, having the information, and Dana, I want to ask you, what are some of the things they need to get pre-approved? What documentation is needed for that?
When it comes to the documentations, they're going to ask for, your W-2s, your 1099s, depending on, what you do for work. They're
Mhm.
going to ask for 2 to 3 months of, assets, banking statements, your retirement accounts, because the bank wants to make sure that anything happens that you might have at least 2, 3, even 4 months worth of
Mm.
reserves in there. You also want your pay stubs, your last 30 days of pay stubs. And this is another thing, is that during the process, keep this in mind, when it comes to the pay stubs, as the whole process is going on, the underwriters will ask for an updated pay stub. And the reason why they do that is because during the underwriting process, they want to make sure that you still have your job.
Right,
People are losing their job, just like that.
right.
So that's going to be another thing. So keep in mind, as the process goes on, if you get paid every other Friday, just PDF file that pay stub and keep it. They're going to ask for, your license, social security, and your if you have a passport, you could show that as well. But those are like the main things that they're going to look at. And then there's going to be onesie twosies depending on what situation that you are in at that time. A credit is another big thing. Speaking of planning preparation, I think credit
Hmm.
is something that is not thought about as
Hmm.
you go on in life. Because like, if you're not planning to get a house, like if we're planning on a vacation, we're putting that money away. But planning on your credit as well is just as big. You want
Hmm.
to make sure that, oh, I don't need to pay that Verizon bill. I'm going to go to Sprint. But meanwhile, that bill did a lot of damage to you.
Yeah,
And meanwhile, it was only $200, but it knocked down your credit hundreds of points because you didn't
yeah.
pay it month after month after month. And like, I see that a lot. Sometimes it's like those little onesie twosies that
Hmm.
I'm not going to pay that because they made me mad, and I'm going to go over here. And now you're going to go ahead and pay it, but then it could take 30 to 60 days depending on when they decide to report it to the
Right,
credit. So like,
right.
that's another big thing as well.
Yeah, credit management is key as well. I think that,
Hmm.
sometimes we don't understand the severity of managing credit. And like you said, something simple as that, switching cell phone companies. And it recently happened to a friend of mine. It was a $75 bill, but she didn't know that the Verizon had reported it because she switched to a family plan within Verizon. So she didn't leave
Hmm.
Verizon. She switched to a family plan, her single plan to a family plan. And for
Yeah.
some reason, there was a $75 left on her individual plan. And she
Yeah.
didn't get a notification or anything, but she had a credit monitoring service. And then she got a notification email that this was on her credit. So she was shocked to see
It's good.
this on her credit. But these are the small things that happens over time if we're not managing our credit that could affect us in the long run to do
Yeah.
something like this. And
Yeah.
Jay, for our last point today, I want to talk about the difference between closing costs and down payment, because I know for some people, they think you just need the down payment. And we never really talk about the closing cost portion, because some people think when you say down payment, all of that is included.
It's included.
But
Yeah.
you need all of those funds, but they serve two different purposes. So tell us about
Yeah. So your down payment is what the bank sees as how much risk the bank
that.
is going to take. Now, depending on what type of loan you can go down to 3.5% or even 3% as a down payment. But with those numbers, you have something called a higher loan to value ratio. And the higher that loan to value ratio is, the bank says we're taking on a lot more risk. So the bigger down payment that you have, you might get a better interest rate, because now the bank is saying, it's like, okay, this individual or a couple are giving us a bigger amount of money. So that means they're a little bit more serious. We don't have
Mhm,
to worry about too much about them. And it's a less risk that the bank has to take.
mhm,
And depending if it's below the 80%, so you put down 20% or more, what they'll do is they won't add the private mortgage insurance on there. So it depends on how much the home is. So let's just say if you had a home of, not on Long Island, obviously, but just for number's sake, $100,000 house, you put down
mhm,
3.5%. That's going to be $3,500 worth of down payment. So I like
mhm,
to use that number, 100,000. So if you have a $400,000 home, obviously, your $400,000 home, it's about $14,000 worth of down payment. Now that's just the down payment to the
mhm,
bank, saying how much, what we're willing to work with you with. Then you have the closing cost. This is something that's totally different. It's going to have the origination It's going to have all the title information, the credit information, real estate attorney information on there. But the biggest thing, what's costly for everyone, is actually your taxes.
Mm-hmm.
So a lot of people are like, oh, why does it cost so much? It's like, because we live in New York. There is all the taxes, the transfer tax, the mortgage tax,
Mm-hmm.
taxes just because type of taxes that are on there. Like,
Just
that's what
because
they do down here. Just because tax. Like, they should just really put that on there. Just because tax.
just because you live in New York, here's this tax.
Exactly. But it's your prepaids, your escrows. You know, sometimes they're gonna ask for the 1 year in advance when it comes to homeowner insurance. Most likely, that's what it's going to be when you're getting a new home, and then maybe they'll ask up to 6 months worth of your taxes. Now, it
Right.
takes, so you know what your property taxes are. If you're living in an area that's $10,000 a year, that's $5,000 that's going to go into your escrow.
Right.
Homeowner insurance is roughly around what, $1,400 to $1,600. Now you add that onto there, and then the transfer tax, and then all the other tax. Like, there's just so much on there. But the biggest bulk of closing costs is not to the bank or whatever the case may be. It's really because of your taxes, your prepaids, and your escrows.
Right. So it looks like the down payment portion of the funds that you'll need that at the beginning stage of the process, right? You'll need that to submit once your offer gets accepted and you sign the contract. When you sign a contract, you'll take that down payment funds in the form of a certified check with your signed contract, send it over to the seller. That's when the down payment comes into play. The closing costs is what you will need is when you have a scheduled closing and you're going to sit and sign papers, sign your life away, give this money up, and you're going to get the keys in return to your new home. So understanding the difference in the two, that you still need to have these funds, even though they come into play at different points in the process. But it's key to have that as well, because no one wants to get to the closing table and you realize, oh, I don't have enough funds to close.
Yeah.
Then there's no closing, there's no house, and you may lose your down payment.
And that's why you were saying before why they want to see proof of funds, proof of assets, because nobody wants to wait the 30, 45 days or whatever it takes. All of a sudden you're at the closing table and it's like, okay, Mr. and Mrs. So-and-so, we need this. And then you're looking at each other and you don't have it. That's horrible. And that's why proof of funds is huge right now. And I try to stress that to people. It's really, really huge.
Yeah, definitely. So, I think that in this series that we're doing, the planning and preparation, it's going to enlighten people. It's going to help you understand the process. And it may even jumpstart the idea for you of maybe I can buy a home over time, right? It doesn't have, I'm not saying today. We're saying what you can do is plan for it, because home ownership is important. It's a foundation for building wealth. As this show is called, The Wealth Project. It's one form of building wealth. There are many, but I believe in home ownership as one form, because you purchase your home, it grows value over time, it builds equity. It's yours, right? And with that equity over time, you can buy another home, you can invest, you can do other things. But when you rent, you're paying somebody else's mortgage. But think about it, because you're paying a mortgage, it's just not your mortgage. So if you're going to pay that rent, you can figure out how to pay your mortgage and make that rent your mortgage, your own mortgage, to help you build generational wealth over time. So guys, Dana, anything else you want to share with us before we wrap up? How can they reach you? Where can we get in contact with you?
You can reach out to me. My email is dgeorge@hartfordfunding.com, or you can give me a buzz at 631-294-6446. And then my website is Dana George Home Loans. Oh, there it is, scrolling at the bottom. .com.
There you go. That's his website. So guys, Dana and I are happy to help you in the process, happy to help you plan, give you information you need, and steer you in the right direction. I see there is a comment here. How much, let's see. Dawn is asking, how much are closing costs approximately?
Well, it really depends on the area that you live in. Just from seeing different closing costs, like your taxes, prepaid, and escrows are usually about 50 to 70% of your closing cost. So it depends on where you live at. They could be $12,000. I've seen them go up as high as 17,000, and then depending on what part of Long Island you go onto, they can go a lot higher than that. But it's just mostly going to be about the taxes in your area.
Right. And based off the purchase price. So
Based on
based off the
yeah,
price of the house you're going to buy. So let's say you're buying 300 versus 5 versus 6, know that the closing costs will coordinate based on the purchase price as well.
yeah,
And then the taxes and everything else that comes with it. Location is key. If you're in Queens,
it's
the
really big.
taxes are different from Long Island, upstate, so there's the difference. It all depends on where you want to be and how much you want to spend for that. But the general rule, I think the percentage of the purchase price is what, Dana, like, is there a general like percentage you use based on your purchase price?
They say about 2 to 5%.
Right,
But I've seen it to be a lot higher because it's based off the property taxes. Because
right,
it's just a because then there's places that have village tax.
right.
So it's just like it's really hard to say. But if someone has a specific place that they're looking at, then we could roughly go over that with them.
Right. So if there's a place you have in mind, Dawn, that you want to get some information, listen, it's free. We're not obligating you to anything. The information we're sharing is to help you, educate you, and to put you on the right track. So if you want to find that out, definitely reach out to Dana and myself. We're happy to help you. Thank you for tuning in, Dawn. We appreciate you. Share the live after so some of your friends and family can get this information as well. And welcome to our planning and preparing series. We'll be back. We will post our next topic, next time that we'll be on. I thank you, Dana, for joining me.
Thank
Thank
you.
you guys
Thank
for
you.
tuning in. Everyone have a great weekend. Stay safe and warm.
Enjoy this beautiful sunshine, everybody.
Yeah, I'm so excited to
No more
look.
snow.
I can see the grass in my backyard now.
For real. I forgot I even had grass. I thought I just lived in like Alaska or something. That's
I
crazy.
know. So enjoy the sunlight, guys. Take care and be well.
All right. Bye.
Bye.